All right. All right, audiences. I gotta put this disclaimer out there. This is entertainment for view for your educational and entertainment purposes only, not to be taken as financial advice. I do not know your personal financial situation. And TikTok 20, and just to see, this one is brushing your teeth on my show. And as you can see, they're over here. Look at that. Who's that sneaking in and see what I'm doing? Sneaking in on my show. All right. I'm starting with 27 seconds. So out of here. All right, we're out of here. This one's getting out of here to brush your teeth. All right. Peace out. Hi, social media world. My name's Alfred Gordon-Lew. This is 8 at 8, and 8 minutes starts right now. This is what happens when you do this show at 8 o'clock in the morning. They're still not at school yet. Today, we're going to focus on this wonderful program, or not program, this wonderful company right here. Do you know what that stands for? ADBE? Adobe. Adobe. Yeah, very good. Hey, go brush your teeth. Get out of here. All right. We only got 7 minutes. I know last time when we did this, I ran out of time. So let's just dive into this and let's work this out. All right. We're talking about Adobe. We're talking about technicals. Let's take a look here. Technical analysis. What I really want to talk about is time frame, trends, and trades. I'm going to do that every day for each company. All right. So this is our wonderful spider. I'm just going to zoom in here because I got all these windows, and let's take a look if we're going to follow Warren Buffett's advice, if we are in or not. And this is why I want to do the show, because as a former financial advisor, I wanted to tell you when to get in and out of the market. Most people say you can't time the market. Well, I think you can at least know which way it's going, and you need the indicators to do so. And I know that for my clients, when I started doing this back in 2008, 2007, understanding the markets, taking a little bit of time to understand what those signals and signs are, you can avoid huge, crazy dips. So here, here, and here, this is what we're looking for. It hasn't moved past the moving average yet, so we're still kind of teetering on, but there's definitely more sellers in the market. Look at that. That's a pretty big red. And right now, this bar is really high. So I'm going to try to move this up here. I tried to fix this. There you go. I'm moving that. So as you can see, it's above this wonderful line here. It hasn't got an arrow, which means we're still kind of teetering the market. So that's the reason why I wanted to show this with you and go over it almost on a daily basis with you. Because we're watching these. If there's 3 red arrows, it's a probably good indication for this month, right? Time frame, month, right there, that we should probably get out. So the trend is still good right now. It's bullish. We're still investing, but it is teetering and slowing down right here. So we're watching these trends right now. And as for a trade, if you're in S&P 500 or in this wonderful index, you're probably looking to buy the SPY. It is the same thing, just I think 10 times less. So it's the same chart. This is the fund that you would invest in. You can't invest in an index, but this is an index ETF right here. So the trend is still the same, right? Boom, you only got 1 red arrow, so you're still invested into it, knowing and preparing that it's going to turn. All right? And the trades right here, are you going to hold it, the position, or are you going to get out of the position? All right? So that's what we look for in a time frame. So let's go back and let's look at some companies that are inside this spider. And we're talking about Adobe. And you can't see it because I covered it up right here. Look at this, technical analysis on Adobe. Oh, look, that's a really good place for it. Look at that. We're going to do technical analysis on Adobe. Let's take a look at the overall trend on the month for them as well. So as you can see, this is an example time frame, a month. The trends, we're catching 1 arrow, so that means the price is below average. Man, back in, this is, December. I can't see that because it's all the way at the bottom. I got to rectify that too as well. This in December, it changed. So the price is below average. there's becoming more sellers, and in here historically it is becoming really it was greedy, and now it's fallen down to ideal range or going down into a fearful state. So the trend is going down. So if you were a trader in here, this is what we would call positional, not positional, sorry, swing trading. You're catching these momentums, right? So this is a month, this month, this month. In the last 3 months, it's had a downtrend. So you probably want to do some other calls, or you want to do some puts to, you know, I guess offset some of the losses if you are holding this thing, or you would have gotten out in December and you're waiting on the sidelines looking for that dip. So that's what we call a swing trading. If we wanted to take a look at more specifically swing trading, we could look at the daily chart. So we're moving into a time frame where it's daily now, and we want to zoom in here. And you notice, again, this is what these individual candles look like when we're moving from a monthly chart to a daily chart. So you can see for the last 30 or so candles, whoa, that the trend has been going down, right? And one tool that we love to use for this is Bollinger Band. So let's load that up here for you. Take a look at this. So this is a study that you can find on most charts. The other ones were MACD, stochastics, and simple moving average. On a daily, I usually like to look at the Bollinger Band. So you can see where in a day, if it's around the average, which is green, or if it's on the high end of the average or the low end of the average. And it uses a wonderful computer algorithm, or checks it to see if it's above or below. So when you're seeing dips like this, it's definitely lower than, I don't know if you guys can see my mouse, there you go. This is definitely outside of the normal. This is when I would consider dip, right? And I consider dip below the average, but also dip below what is normal here. And this is what would be a buying opportunity if you're really into this company and you knew that it would dip and bounce back. And same here, you see how they're just outside of this range. And right now it's below average. So if you wanted to swing trade this, this is where you would know. And then you would sell when you're above average above this line, or peaking above the average right here at the outer rim. So there you go. That's an example of when you would buy, when you could sell, or if you had here in this wonderful channel, you would buy in here, and then you would wait for it to move above the average and then sell here. And that's what people look for. I only got 1 minute left. Oh my gosh, we're going quick. So that is the wonderful trade. You're looking for these wonderful swing opportunities. So you buy it on, and I have to work out these things for you. If it dips really low in January 10th, you could hold it, and then you could sell it definitely February 2nd. And that's what you're looking for. You're buying below here and then selling high. You've heard that phrase before, buy low, sell high. Well, this is how you know if you're buying low and then you're selling high. All right. And now the next thing, if we were to do intraday trading, oh my goodness. This is not my realm, but I don't know if I have the stomach for this for day traders. But you'll see the time frame. We're looking at these candles. Every little tick here, every little tick that you see is 1 minute worth of time. So let's just zoom in here and let's take a look at just today. All right. And only got 30 seconds to do this. Time frame, a minute. You can see the trend. It is definitely going up for Adobe. But what I like to do here, hopefully I can do it in this time frame, is look at this wonderful tool called the Fibonacci. You take this Fibonacci, you come here, 30 seconds. You know, it's my show. I can pause it. Boom. Paused. Whew, I feel better about that. If we're taking our Fibonacci, what we want to do is get rid of all the other studies that we have here. So let's remove all the studies. Yes, let's get rid of this. And if we just have a plain chart here that you guys can see, we're taking Fibonacci, we're drawing from the bottom to the top. And this tells us when these prices, look at that. I just picked the bottom and the top. And look how these Fibonacci lines, these are nature lines. This is like the golden ratio. This is the circle. To see where most places would stop, or most prices would naturally stop or stall out or move forward. So as you can see, this Fibonacci is pretty true. If I were to redraw it, let's see here. I'm just going to remove this. I'm going to pick again one of the low points. You can't see my mouse. I'm going to drag it up to the top right here. And you can see that it fits really strongly in here, right? And in nature, let's see, I'm going to pick I probably picked this right here. So what I'm doing is I'm trying to line up a whole bunch of points to see what is really kind of strong. So here, I'm just gonna pick that. Again, this is just the estimate. It's not law because it's all about human patterns, but this ratio happens naturally in the world. So what we're looking for, and I highlighted these strong lines pink because this is where big shifts usually happen. They're around the 61% or the 38%. You'll notice that a big shift, if it pierces through here, that probably means that it's testing to break out. And you can notice that there's a little bit of ceiling, and then it does kind of break out. And then it has resistance around this 38%, and you notice that it broke out again. So what I probably want to do is draw another one, another Fibonacci around here, and to see where all those breakpoints are as well. And this is a predictive tool. It tells you about the nature, and as we move forward each minute in time, you can see that. So that's what I wanted to show you today. Again, man, looking at all the 3 different time frames is fast. I'm gonna have to work that out and figure out how we can do that best for you guys as well in the next 6 seconds. So thanks for sticking with me. I'm still working out how to do it. Peace. Oh man, that's not what I want to show you. Well, this is what we did yesterday. I guess I'm going to take this time to talk about it, but today we had a wonderful launch with our book, Dim Sum Love. These are the winners from yesterday. That's my lovely artist, illustrator who did our Dim Sum Love. If you haven't got a copy, go check it out today. It's available on Amazon. I think people that are watching in Europe are buying this right now before they go to sleep, so thank you, thank you, thank you. And let's roll that outro. All right, everybody, let's roll that outro. Let's get out of here. Yes. All right, can you hear me? Perfect. I wanted to show you this. Look at this. Look at this child. She knows it's 8 at 8. She's just sneaking in trying to get some fame. So, again, thank you for sticking with me. I'm going to tighten up that ship, talking about each of these companies each day, rolling through all those indicators. But it's a lot to go through. Monthly, daily, and quarterly. So, I'm going to have to figure out how to go a little bit faster, a little more concise. But thanks for sticking with me, everybody. And I guess since I already plugged it, let's take a look at this. Boom! Yes! I can't show you because I can't share screen, but you can hear me. Today, February 8th, we got that one-day sale at $888. That's, again, that price, I apologize, that price is for American audiences. Most of the people that are watching are in the States, that's US. And when I publish on Amazon or KDP, I have to actually use Amazon.com, not .ca. So this $888, I apologize if it's misleading. It is $8.88 on the American market, and then every other market reflects that. So, with that 1 minute said, I want to say thank you for everybody that's supporting. Go grab a copy of this book. It is already working up its way in the charts. That's on the chart. Thank you, thank you, thank you. In Canada, we're getting it strong. UK, I know you're out there. I got cousins messaging me saying that it's in their shopping cart on Amazon, and they're going to check out once they get free shipping. Ellen, I love you. My niece, thank you for supporting out there, and hope you can read it to your babies. So, great book. Enjoy it, everybody. Go get a copy out on Amazon. You're just looking for the title, Dim Sum Love.